Hello and welcome to another Renegade Investor Report with me, Graham Rowan. And this week we are celebrating all things entrepreneurial and all things business, because that's what we need more than ever to get us out of the economic mess that we're currently in. So I'm going to talk about help available for startups, and I'm going to talk about some of the best business tax breaks available in the UK as we head into 2022. Just a reminder, this report is brought to you by the Beaufort Society, which is a private members club for high net worth investors around the world. And you can find out more about them at beaufortsociety.com. And also the hot news for anyone looking to get into the crypto sector is that we're now launching the Crypto Research Institute, and you can subscribe to the Institute and receive all the information about the Crypto 20 Index, which is the result of 18 months of research into the top 20 performing cryptos, and that's all being published starting on the 6th of December. You can find out all about that at crypto20index.com. So thank you to them. But we are celebrating Small Business Saturday coming up on the 4th of December. And we're really, I think, at a time when, there's a new variant of the banana syndrome making the news. It's going to put even more threat on businesses. Are we going to have politicians cancel another Christmas for us? It's pretty depressing if you let those things get to you. So it's probably best to ignore all that. But the main point is we want to celebrate business, and particularly small business. And I think it's a very timely sort of thing to be thinking about. Whatever you are, wherever you're at in your career, maybe your job's been threatened by the fallout from all the economic mess that's been created, or maybe you're starting out, you're in your teens or 20s, or you've got children of that age. The old careers advice just doesn't wash anymore. In my day, it was all about getting good grades, going to university, maybe becoming a lawyer or a doctor. Even professions like that are going to be under threat as we head into this age of artificial intelligence and robotics. We already have robotic surgery being done. We have databases that can work faster than any lawyer's brain can. So a lot of those old professions are really going to be under threat in the next 10 or 20 years. So one of the best ways you can think of for generating wealth, and also perhaps generating enough multi-generational wealth you can pass across to your children, is in business. And really, there's never been more help available. For all the fact we have a prime minister who doesn't really seem to like or understand business, we do actually have in the UK a lot of help available for business. And I want to go through today some of the help if you're in a startup position, if you're more established, some of the tax breaks you can use, right the way through to an incredible pension system that even very few business owners seem to know about, which I call a financial Ferrari. So buckle up. There's a lot of useful information here for you if you're already in business or if you're thinking of getting into business. And I join the organization behind Small Business Saturday in saluting everyone out there who's running a business at the moment. You are, to me, the heroes of the economy. You're the ones that are going to create the wealth that's going to pay for all the things the politicians are spending our money on. So it's all down to us, guys. So if you are in a sort of startup mode and you're looking for some help, here's a few organizations you can turn to. Enterprise Nation. This supports you from startup through growth, digital content, year-round scheduled events as memberships and resources. So take a look at that. Just Google Enterprise Nation. Entrepreneurial Spark is another one. This is an accelerator program for business. So these are really helping you grow once you've got your idea in place, you've got your basics together, then really growth becomes the most important thing. They've got hubs across the country and they can help to accelerate the growth of your business. And then there's MI or Me Ventures, and they have a live chat, instant business advice and support. Again, there to help you with people who've been there and done it, or some experts in different subject matter areas. You can get access to groups, you can find grants and funding advice, legal stuff. It's very easy to fall foul of the law when you start a business, particularly things like employment law, which have multiplied in the recent decades. There are now so many ways in which you can be royally screwed by your employees, even ones who've never actually got as far as working for you. I know people who've been taken to tribunals just for their job ads, or for the way they conducted the interview, or for not giving the right kind of reason why they rejected somebody. And in a kind of a challenging labor market like this, the last thing you need is some professional claimer who wants to go around just getting compensation from people without ever actually doing a day's work. So make sure you get some decent employment law advice as you go into business. There's also the National Enterprise Network, and they have a wide range of services that are kind of impartial and independent on how you start and grow a business. They've got an online directory. It's got, if you're looking for key support areas, it could be anything from marketing, accountancy, sales. There's lots of stuff you can outsource in a business these days. The things I'd recommend that you don't outsource too quickly are things like marketing and sales, because nobody else will be as passionate as you are about your product or service, and B, you've really got to be able to sell it. If you can't sell it, nobody else will. So don't kid yourself that you're above that nasty sort of horrible salesy stuff. It's the most important role in any business, and you, if you're the business owner, have got to get good at it. And if you just can't, don't like the thought of that, you got to get over yourself, because it's mandatory. If you can't sell it, you don't really deserve to be in business, and you shouldn't be in business. Then good old Prince's Trust. We may have lost the Duke of Edinburgh this year, but his trust continues, and that offers help to people from the age of 13 all the way up to 30, with all kinds of ways in which you can succeed in getting the right experience for business, work experience, getting business tools and resources together. Really, again, it was initially obviously set up to help young people, but all the way through to 30 years of age, and we have more and more young entrepreneurs now. That's what I find so exciting. There was a time when it was almost a dirty word to be a business owner. You were kind of some sort of low life that couldn't get a proper job. I think that's really turning now, as we see so many successful young entrepreneurs. I see a lot of them in the crypto space. People who have become billionaires in their 20s. That obviously, let's set expectations. That doesn't happen very often, but a lot of young people are creating and building business now, and they think it's cool to do so, which is really exciting. So, we need a generation of entrepreneurs. That's what this country, and I think the world, frankly, needs, because there's so many sponges, there's so many government policies that are just throwing money at people and projects, that will never see a return. The only real way in which we build wealth is through productivity, through making stuff and then selling it to the world. It ain't changed in hundreds of years, and it ain't changed now. The stuff we can make has changed, and almost to a limitless degree, if you look at things like in the digital world and the metaverse. So there's no shortage of new stuff to create, but the fundamentals of how you grow an economy are lots and lots of people growing individual businesses, making stuff that people want to buy. It ain't that difficult, but hey, maybe one of these days Boris will understand that. And also, finally, you've got to have some funny names in some of these organizations. We've got Startup Donut, which is nothing to do with Krispy Kreme, apparently. It's a collection of resources for business, selecting topics and then bringing up information about those topics. So, all of these things are there to help you. All you need to do is to know what it is you want to do. Sometimes people get put off thinking they've got to think of some amazing original idea to go into business. Well, some of the best businesses I've seen, things like pizza or scaffolding, or cups of coffee. They're not necessarily amazing new inventions, although the technology that we're going into at the moment clearly creates some fantastic new opportunities. Sometimes just having a new angle on a very basic product or service is enough to build a hugely successful business. So don't be put off by that. Just find a good starting point is to find the things that irritate you, that you can't do, or are a real pain to do, and try and fix that. Make something better. Just fix the problem, build a business around that, and test it very quickly without spending too much money on it to see if people want to buy it. Okay, let's focus now on assuming you've got a business. Perhaps you've been established for a while, you're making some money, but you now want to look at where you can get money to grow the business and where you can get those all-important tax breaks. Because the more you can hang on to within the business, then the more you can reduce any kind of cash flow stress, and the more you can invest. Because one of the things that is absolutely clear is that over the last 20 years, investment in business has been far too low. I think a lot of businesses have grown on the back of cheap foreign labor, much of which has now disappeared thanks to Brexit and banana syndrome. And so this is very much now the time to invest in new plant and machinery, new software, robotics, AI, all the things that are going to get you more bang for the buck in the business through automation rather than through cheap labor. But I need to start with a big disclaimer here. I'm here to give you some information, but I am not a qualified accountant or tax advisor. So you cannot make decisions or make commitments based on what you hear in this episode. What I want to do is trigger the thought in your mind to go and find out more about these things. Speak to your accountant, go to the government websites, find out more in detail. I'm just here to give you some information to trigger that thinking. Do get proper professional advice before you take any action or spend any money or make any commitments or sign any contracts. Is that clear? Disclaimer, 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 caveat, caveat, caveat. Okay, so what we're going to look at is raising capital through either startup loans or through the Seed Enterprise Investment Scheme and the Enterprise Investment Scheme. We're going to look at how you invest in the business and the tax breaks available. One is called the annual investment allowance. One is called the super deduction. And then we're going to talk about research and development, one of the most underused tax breaks of all. And finally, I'll talk about the pensions that are only available to directors of limited companies and which are, in my opinion, one of the most powerful investment vehicles on the planet. And yet they're also one of the least known about, the least understood, and the least used. So there's plenty of information here that could transform your business performance over the next few years. So let's get into it. Okay, startups. On the final topic on the subject of startups, there is a startup loan scheme that is now running until March 22. So you've only got 3 or 4 more months to apply for this. They've got the funding in place for 10,000 new business loans. You can get up to £25,000 at 6% interest. And that's more than they charged on the bounce back loans last year, but it's still a lot less than you'd pay going to the typical bank. Because believe me, getting bank funding for business is a freaking nightmare. You talk about banks only lending to people who don't need the money. Well, it may be one thing to get a mortgage on a house, but you try getting money out of your friendly local high street bank for a business venture. It is like pulling teeth. I've approached some banks won't even open an account for you at the moment, so just getting the bank account is hard enough, let alone getting a loan. So the fact there's a government-backed scheme is very, very welcome. And, spent properly, £25,000 is enough to bootstrap a business and get you going to a point where you've got some revenue coming in. You can have up to 5 years to repay the loan, and it includes a year of mentoring, which of course, very helpful. I think there comes a point in business where you almost can get too much input. And I know some people that have a different coach or mentor every 2 or 3 months, and they all have different opinions. They all think different things are the most important. So I would say in the early days, by all means, take in some mentoring. The best platform I've found for this sort of thing is Nigel Bottrell's Entrepreneurs Circle. I would encourage you to join that. I think he's still doing a 90-day free offer, and then you just pay so much a month after that. But there's a huge vault of information and courses and training there. So do have a look at Entrepreneurs Circle if you are looking for some ways in which you can get some reliable mentoring from people that actually know what they're doing when it comes to business growth. It's run by the British Business Bank, and that's the link if you want to find out more about a startup loan scheme. It's British Business Bank Finance Hub Startup Loan. Go and have a look at that and see if one of these loans will get your business idea off the ground. Now, for more than 20 years now, we've had one of the best business growth schemes, I think, in the world in the UK. I'm always quick to criticize politicians, and Lord knows they deserve it. But sometimes, occasionally, probably by accident, they actually do something right. And this is a scheme that is so powerful. It applies to companies that are not on the stock market. So you're not going to see any FTSE 250 companies or AIM listed companies here. They're privately owned companies, and they have fewer than 250 staff and less than 15 million in assets, which, that's still pretty big. I mean, there'll be a lot of you watching this think, wow, I wish I had a company that size with those assets. But so these are small in inverted commas, because one of the things you have to understand when you see SME, the term small and medium enterprise bandied around, that's everything from a one person in their bedroom kind of startup through to some companies that might be turning over 200 million pounds or something. So it covers a very wide range. If you're starting, you'll be very much at the S end. If you've had a 20-year growth in your business, you might be approaching the M part of SME. But as you can see, this enterprise scheme designed to help grow businesses applies to some pretty chunky size companies. And as an investor rather than the business owner, that's quite an interesting consideration, because obviously the very riskiest of all investments are the brand new startups. But once a company's been around for a few years, it's got a team in place, it's got assets in place, then it's de-risked for you as an investor, and yet you can still get some amazing tax breaks. If you're the company, you can raise up to 5 million a year through the enterprise investment scheme, up to a maximum of 12 million in total. So some really chunky numbers here that could take your business to the next level. And obviously the whole point of this, raising investment on this level, is that you're going to take the business to a whole new level of growth and multiplication of value. If you're the investor, you get 30% income tax relief when you invest. So, every 10,000 you invest effectively is only costing you 7,000, assuming you are a taxpayer, assuming you're an income taxpayer. And of course, the more income tax you pay, the better in terms of the value of that relief. And if you hold these shares for 3 years, then you don't pay any capital gains tax when you sell them. And that, I think, is enormous. That's probably a bigger benefit really than the income tax one, because the whole reason you're buying shares in a company like this is that you expect them to grow significantly in the future. And that's where normally you'd pay a big slug of that in tax. And I suspect a bigger slug going forward. I'm sure capital gains taxes are very much on Rishi Sunak's agenda. Everyone seems to be advising him to bring them in line with income tax. So you could easily find yourself paying 45% capital gains tax in a year or two's time when these shares would mature, as it were. So really powerful benefit. And also, if you're thinking about passing the shares on to the next generation, they would be free of inheritance tax after 3 years. So if you build up a portfolio of shares in these kind of companies, and just to be clear, this is not a loan you're making, you're buying equity, you're buying shares in these privately held companies. If you build up a portfolio of these, they become an amazingly tax efficient inheritance vehicle to pass wealth on to the next generation. And here's the really nice part. Obviously, we know that young companies are risky. You've seen all the statistics about the failure rate and so on. Well, if one of these companies fails, the losses can be offset against future income tax. So you get a second tax benefit, even if things go wrong. So what you have with these kind of investments is unlimited upside, and that is unlimited tax-free upside, and a managed downside risk with tax breaks as you come in and tax breaks as you come out if there's a loss. So, there can't be many schemes you can think of where you've got unlimited gains and so many elements of managing the potential loss in your favor as you go in. And you wouldn't probably run out of funding for this. You can personally invest up to $2 million a year in an enterprise investment scheme. So chances are that'll cover the spare change you've got left over behind the sofa at the end of the year. And you can put all of it into these schemes at that sort of rate. Now, more recently, they introduced the seed enterprise investment scheme for even smaller companies. So what you've got here are bigger benefits and bigger risks. So to be clear on this one, this is for smaller companies, fewer than 50 staff and less than 200,000 in assets. So typically, these will be somewhere between startup and maybe 2 years old, very early stage companies, but obviously, if you can find the right ones, you can get very favorable conditions. So they are, less than 2 years old. They can raise a maximum of 150,000 through seed enterprise investment. You can put in a maximum of 100,000 a year, but you get 50% income tax relief. So every 10,000 you invest is only costing you £5,000. There's no capital gains or inheritance tax if you hold to 3 years. So in that regard, it's the same. You have this unlimited tax-free upside. Losses, again, can be set against future income tax. So if you've already effectively got in at half price and it went to zero, you can get more tax relief on your losses. So the net might only be about a 20-25% cost. So you come out of it. If you had a total loss from the investment, it would only have cost you maybe 25% of what you put in. If it goes from strength to strength and grows, you have unlimited tax-free upside. And there's another little twist to this. You can get something called capital gains reinvestment relief. So that if you've recently had a liquidity event of some kind, you've sold something for a gain, that could be a property, it could be a business, could be a piece of art or something, up to half of that, 50% of that recently paid CGT could be reclaimed if you then reinvest in one of these seed enterprise investment schemes. So if you had, let's say you've had that event and you then perhaps spread that risk across 4, 5, 6 of these kind of companies, you could have an enormously tax efficient portfolio. And the chances are one of those 5 or 6 could shoot the lights out in the years ahead. And maybe just like this is what the venture capitalists do all the time. You invest in 6, 7, 8, 9, 10 of these things. 1 or 2 will do really well. And usually the gains from those are enough to offset any losses from the others. And with the tax benefits so geared in your favor, you can see why these become a really popular approach for sophisticated investors. So on the seed side, you're limited to 100,000 a year per tax year. And clearly, the advice, which we can't give, would be to diversify, because you don't want to put all of that into one of these startup companies. But if you can start putting 10,000 into 10, and you get all this kind of relief on your income tax, then you've got a very nice portfolio that you've built at very low cost. And if you've just had a liquidity event and paid some CGT, this could be a nice way of getting some of it back. So this is the sort of thing that sophisticated investors do. And these schemes are there. Some of them have been there for 20, 30 years. So you've got to be on top of this. You've got to know about this. A question for you: has your accountant told you about these things? If not, maybe it's time you changed your accountant, because these are the sorts of things that you and your fellow directors and your fellow shareholders should be thinking about every kind of quarter when you meet to talk about longer term strategy. What could we do if we brought in 150,000 of new investment, or 5 million under the enterprise scheme? These are key decisions, and these schemes are there and open to you. So once you've tapped up your own funds and friends and family, you've got to go out to the next stage. This is how I know Beaufort Society do a lot of this work with youngish companies looking to get to that next stage. And again, the investors benefit from all these kind of things. So take a look at the EIS and the SEIS schemes if you're looking for new investment in your business. Let's just talk about how the tax breaks work. So if you invest 10,000 and you reduce your income tax by 30%, so the net cost is 7,000. Let's assume that we have a successful story here. The company doubles in value in 3 years. You can now sell those shares for 20,000, so that's 10,000 gain, but they're free of any capital gains tax. So under current rules, you'd save at least 2,000. In the future, I think that could easily be 4,000 or 5,000. So you've got a 10,000 tax-free gain in 3 years in that scenario. But what if the company fails? Well, you could offset the loss of 7,000, because obviously you only actually cost you 7,000, against income tax or against other capital gains. So, if you're a 40% taxpayer, then you're saving 2,800 there. So you've had 3,000 relief up front, you've had 2,800 there. So the net cost of that 100% failure was only 42% of what you originally paid. And the tax-free gains are without limit. So that's a pretty good way of putting the odds in your favor. And if it happened with a seed investment scheme, because you've got the bigger income tax break of 50% upfront, the net cost of a total loss could be as little as £2,200. So this is why these things appeal to people. And obviously, you've still got to do all your due diligence. A lot of these companies that sound great will not make it. And you've got to really try and understand what you're getting into. Maybe it's an area of technology that you're particularly keen on, that you understand how it works. You see where the unique selling points of this particular business are. You see the intellectual property, or some kind of aspect of what they're doing really appeals to you. When you can get in on these kind of terms, then it really does load the dice in your favor, and it gives you, the tax breaks that you need. But obviously, this is all assuming you're paying income tax in the first place to get these benefits. So this can be one way. If you're actually a high-earning employee rather than a business owner, these kind of things can appeal to you because you're paying all that income tax. You cringe every time you look at your pay slip at the size of those deductions. I've been there. I know what it's like. Then here is a way of actually reclaiming some of that and building a portfolio of tax-free gains for the future. Two really powerful schemes. Okay, a different way of getting investment into your business, or at least tax breaks that relate to it. Let's assume you've got a way of raising the money. One that's been nicknamed a yo-yo tax because the allowances and the dates and so on have changed so much, is the Annual Investment Allowance, or AIA. Now, this was due to fall to £200,000 next year. It's now actually been retained at its £1 million level until March of 23. And that's a significant date because the following month is when the new higher rate of corporation tax comes in. Very disappointed that we've gone down this road. Just to get on my soapbox for a minute, I had really hoped that they'd get a bit more radical in a post-Brexit Britain. I really thought we'd go for being a low corporation tax country that would attract business here, a kind of Singapore of the West, if you like. That kind of thing I thought was going to be what we'd do. Instead, we've gone in the other direction. And while Joe Biden has been trying to get everyone to sign up to 15% corporation tax, we're going to go to 25%, which I think sends completely the wrong signal. So for me, that was a very bad political decision, but that's where we are at the moment. Now, 100% of what you invest in, like plant, machinery, and so on, can be offset against corporation tax at the current rate of 19% and the new rate of 25% in 2023. Ironically, this allowance becomes more valuable as corporation tax rises, but only if you are the kind of company that's big enough to be paying that new corporation tax, because it doesn't apply if your profits are below 50. I think it's going to be staged up to 250. So it's only if your profits are 250 or above that you're going to pay the 25%. So you need, again, to check with your accountant as to what's going to work for you here. But essentially, if it's the right kind of investment, the full amount that you're paying is offset against your profit before arriving at your corporation tax figure. So let's just look at a worked example of that. So let's say you're making 250,000 taxable profit. Your current corporation tax bill on that would be 19%, which is 47,500. You decide to invest 100,000 in some new plant and machinery. Therefore, your taxable profit reduces by that amount to 150,000. Your revised corporation tax bill is 28,500. So the actual cash going out the door is less. And the net cost of that new equipment is the 100,000 minus that 19% tax relief, which is 81,000. So that's how the current established annual investment allowance works. Now, Rishi has announced his new 130% super deduction. Now, there are cynics who say he's only announced it because he doesn't want companies to delay investing through the annual investment allowance until corporation tax goes up to 25% in 2023, where they get a bigger tax break. So he's introduced this one that's kind of going to run in parallel with that to make sure that they have every incentive to invest today rather than waiting for another 15 months or so. So it runs in parallel with the AIA until March of 23. There's no limit on how much you can invest in this. So you haven't got that £1 million limit. However, there are some rules. There's some small print you need to be aware of. I confess I don't have all the detail on this, but I believe things like second-hand plant and equipment and leased plant and equipment may not qualify. And it's possible that they will qualify under the AIA. So you need your accountant's advice on which of these works for you. And again, I'd raise the question, has the accountant proactively raised this with you? If not, if you've just got one of these accountants that's like a fourth emergency service that just does your annual statutory accounts and keeps you compliant, these days, that's just not enough. You need a much more proactive approach than that. So make sure you're getting advised properly and have a look at both of these before deciding which would work best in your circumstances. Now, this disappears when the corporation tax increases. And as I've said, that's not a problem if your profits are below $250,000. So let's have a look at a worked example using the super deduction. Let's assume same profit figure, 250,000. So the same tax figure, 47.5. Now you invest 100,000 in new machinery, but that is increased to a notional £130,000 through the super deduction. So now your taxable profit has come down to just 120,000 because of that extra 30%, and your corporation tax bill is less than half. It comes down to 22,800. So you can see significant benefits of making that investment. So the net cost of this plant and equipment now is just 70,000 rather than 100,000, because you're now getting a 30% tax break on it. And obviously you're paying a lot less in hard cash out the door to HMRC. So two nice allowances available to encourage you to invest in your business. Do take advantage of the right one for you as we head into 2022. Make sure you get the accountant's advice to make sure it's the right one for you and your forecast profits. Now, one of the most underused benefits of all, research and development tax credits. See, so many of us think that this only applies to companies with laboratories or companies that are in the high-tech area. That simply isn't true. This applies to any way in which you try to improve your business's processes and operations and functions and gadgets and widgets and all sorts of things. So it's not just for technology companies. If you improve the way you run your business, the systems and end-to-end processes, that can qualify for this relief. And the interesting thing is you can get this relief even if the project fails. Let's say you set out to make a 20% cost reduction in your end-to-end processes of production, but it doesn't work. And you find that something goes wrong with the technology and you can't deliver those savings. You can still get the tax benefits if you prove that you've done the work and done the project. So, it's kind of free money. And up to 230% of the cost can be offset against tax, even if the project fails. Now, I'm not going to kid you that this is a sort of one-click application. It's a fairly complex, paperwork-heavy process. You may even want to, pay a consultant to guide you through it. I've seen some offering fixed prices to do that. It's certainly a process that you've got to put some resource into and some time and energy and thinking. But hey, if you want to improve your business anyway, why not set up a project to do some R&D and at the same time go through the process, get the documentation in place so you know you're going to get some massive tax benefits in the business. This is probably particularly valuable if your business has just reached that point where it's really starting to take off. You're going to have a bumper year for profits. So to try and avoid a bumper year for a tax bill, that might be a good time to, in parallel, do some R&D on how you can take the company to the next stage, and then to offset the cost of that against this coming year's profits from the sale as you scale the business. So again, depending on where you are in the business cycle, something like this can be a great way of reinvesting in the business whilst at the same time getting some generous tax reliefs that will actually reduce your tax bill at a time you know the business is actually going to start making some serious profit. And as I say, there are some consultancies out there. I've seen them from as little as £2,000 or £3,000. They'll take you through the whole paper chain, get you through that process. And they'll probably give you a fairly upfront assessment, even perhaps free of charge, as to whether what you've got in mind will be viable to get these kind of tax credits. So have a think about how you run your business and whether there's a way in which you could benefit from R&D tax credits. Okay, so now you've got the company up and running, you've got the investment you need, you're doing your R&D, you've got your tax breaks coming through from everything from enterprise investment to annual super deductions. You've got to think now about kind of wealth preservation, tax situations, and investment situations. Because remember, fundamentally, a business only exists for one reason. And that's for you to take money out of it to build your investment portfolio to support the lifestyle you want and that you want for your family and for generations to come. Think of it as a giant ATM. That's what business is meant to be. So many people focus only on the business. And as we've seen in the last 18 months, look how many curved balls can come along, whether they're health related or government regulation related. You can be shut down at the stroke of a politician's pen. So there's all sorts of things that can threaten your business. So the smart way is to always make sure you're taking money out of the business and putting it into an array of different assets that will give you long-term sustainable wealth. That's what it's all about. Here we have one of the best vehicles, one of the best platforms, one of the best structures, whatever you want to call it, for doing precisely that. So good that I call it a financial Ferrari. The technical term is a small self-administered scheme, or SSAS. It's a pension plan, it's a trust, and it applies for UK limited company directors. You can't do this, I believe, as an individual or a sole trader. I'm not sure, maybe you can do it as an LLP, I'm not sure, you have to get advice on that. You can certainly do it if you run an LTD limited company. Obviously, the idea is it's already got to a point where it's profitable enough that you can take money out of the business and put it into your pension plan. And of course, there are two ways of doing that. If you're an employee, you tend to want to get the tax benefits of making personal contributions. But if you're running the company, you can also take off the pension contributions from your corporation tax bill if they're company contributions. I've tended to just do it that way around rather than inflating my salary and then making contributions from that. So, you can do was it 40,000 per year per employee or per member of the scheme. So if you and your wife run the business together, you can both be trustees and members of the scheme. I think you can have up to 12 members from memory. So it's a great way of having the family in there. You can put your children in there. You can possibly put some key staff in there if you wanted to as well. And then the company makes contributions which reduce its tax bill. So once the money is in the pension, it can start to make investments. And the other beautiful thing about this is, although there is that 40,000 each limit, 80,000 if you're a couple, if the company has a stonkingly good year and makes excessive profits above and beyond that, you can still transfer them into the SSAS scheme as what they call, I think they call it unallocated funds or something like that. So it's kind of, you've got to catch up with the contributions in future years. And again, this is not advice. Make sure your SSAS provider explains this to you. But my understanding is that above and beyond the 40,000 each contribution, you can also transfer across additional funds from the business if it doesn't need them for working capital, and they can be used and invested from within the SSAS pension, even though those funds were effectively above and beyond the contribution. So there's then quite a wide range of investments you can make from a SSAS, much wider than the SIP, which is the self-invested personal pension that anyone can get. With this one, you have a much wider range of investments, including unregulated investments and some property-related things as well. So you've now got some money out the business into your pension, you're starting to invest in other assets. And of course, one of the assets you could invest in is the premises from which the business trades. And then the business can start paying rent into your pension plan. And again, that's all got to be set up appropriately by the accountant and so on, but there's no reason at all why you can't have a lease agreement between your pension fund and your company, because your pension fund now owns the office or the factory that you're trading from. And again, you can get commercial mortgages to help with that. You put a deposit down from the pension and you borrow the rest. You buy the premises, and then you get monthly rental income from the business that hopefully will cover at least the mortgage, maybe a bit more, to create some more investment funds for the SSAS. So you've got this growing pot of funds in the SSAS that even includes the brick and mortar that you're trading from. Now, the interesting thing is, again, this is really a financial vehicle. So even though you remember we said we'd put some excess profits into the SSAS, maybe you have a lean year and you need to get some money out of the SSAS, you can make a loan back to the company as long as there's an asset that you can secure that loan with. And one of the things that people use this for is to acquire competitor companies. So if you suddenly see that one of your competitors perhaps got into difficulty during banana syndrome and you want to acquire them, you can actually make a loan, and let's say they also own the premises they trade from. So you could have an acquisition target that's got some tangible assets. You could acquire that with a loan from your own pension scheme secured against the assets of that new business. So you now have effectively a loan, which is going to get interest paid into your pension. You have a new business, which is hopefully going to be cash flow positive. And you've got effectively an additional investment now within your pension plan. So you've grown your company, your trading company. It will now have bigger profits to make more contributions and make more excess profits. You can then repeat that again, use another loan from the SSAS to buy the next competitor business. So you can see what a virtuous circle this becomes, making use of your funding, but also making use of some great tax breaks to build your overall wealth across the trading company, the premises, and the pension. And it becomes a really powerful wealth creation, wealth preservation, and inheritance platform. That's why it's so powerful. And yet, I think only 3,000 or 4,000 of these get set up every year. And there are something like 4 or 5 million limited companies in the UK. So, you're lucky if 1 in 1,000 is actually doing this. So to me, they're the best kept secret in business and investing. So if you have a profitable company This is mandatory. You would be certifiably insane if you don't have one of these. So again, ask your accountant, ask your tax advisor, why haven't I got these? Why haven't you told me about this? Probably the answer is there's nothing in it for them, but I'll leave that to you to have that rather sensitive discussion. So the benefits of a SSAS: your contributions reduce the corporation tax bill of the company. Excess profits above that 40,000 level can be transferred as unallocated funds and then invested to get a return. So, you're still making money off those excess profits. You can loan money back to the business or to a third party. So if there's a property developer that you're working with, you can loan money out of your SSAS for that and just secure it against the project. You can own the premises you trade from. I know that's possible in a SIP as well, but that's about the only benefit of a SIP compared to the SSAS. So, there are many, many more things you can do with a SSAS than you can with a SIP. And it's an inheritance vehicle for the family, much wider investment choices. So, once you've got the firm up and running profitably, that's the time to set up a SSAS, start the discipline of making regular contributions, and get to the point where you can maximize those contributions and hopefully put even more in as excess profits and unallocated funds. See whether there's a potential to either buy your own trading premises, or if you want to buy a competitor and perhaps move your business into their premises. All these kind of things become possible when you've got these kind of platforms in place that you can engineer from. So, how you actually use the funds of your business is every bit as important as the basic business idea and the product and service you sell, because you then move from just an entrepreneur with a business idea into a financial engineer trying to optimize all of these different elements to create and protect the biggest amount of wealth possible in these challenging times. So my thoughts and conclusions. I think this country does offer some of the strongest and best incentives to entrepreneurs that you'll find anywhere on the planet. They don't always make a great job of promoting them and making them people aware of them, but if you start digging around a bit, they are out there waiting for you. Particularly, I think the CDIS and the EIS schemes, they're so generous for the investors. It makes them really, really encouraged to support these young companies, and is a major source of revenue for the owners of those businesses. Investment has lagged for a long time now. We have been focusing on cheap labor. This is the time to change that. If you're a business like that, now is the time to get over it, make the change, invest in the future, and use the super deduction. It's a great thing for the whole of 2022 that's in place. You should be thinking now about your investment plans for next year. How could you accelerate the business to the next level by taking in some of these funds? What would you invest in? And then make sure you set up a SSAS pension and use its flexibility to the full. And I think, my main message from this as we celebrate Small Business Saturday on the 4th of December is that business is the future. It's the best creator of wealth. It's something you can do independent of the government or the Bank of England. You can hopefully create businesses that are location independent that you could take to another country if you want to. But the point is to get there, get started. And if you're at the point of thinking about a future career, be very, very careful, because some of the things that your parents tell you are great, secure jobs will disappear in the next 10 to 20 years. So maybe it's time you thought about business rather than a job. And we need entrepreneurs now, and you have to trust yourself to become a boss. So I hope that's been useful, and I hope you'll join me again very soon for another Renegade Investor Report. Bye for now.